Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Okay, welcome to another live trade. My name is Yanis, and also known as the Conscious Day Trader. And today we're going to break down two main trades that I had from this morning: the London kill zone, and this afternoon for the New York Open. What we're going to look at is the euro dollar and an indice. We haven't seen an indice yet, but we did trade the DAX 40. You would know the DAX as always has had the 30 companies. Now it's moved to 40. It still moves a lot, so it showed some nice opportunity to play into. So what we're going to do is go into our trading view. But first, let me just quickly show you the news for today. We did have a huge drop on the yen, and I did take a trade which was profitable for $100, but then I gave it all back because it continues going down. So that was a losing trade, but that kind of evened out. So in the afternoon session during the New York kill zone time for ICT's language, we saw an opportunity there that we took. So if I take the filters out and we look at today, you can see that we had that news on the yen, and also we had news on the US dollar, but not big news. I know it says it's high news here, but if you went to Forex Factory or other platforms, the news wasn't that big, and it didn't have actually a big effect on the pairs of the dollar pairs. So let's jump onto trading view and we'll grab the euro dollar. And as you can see, I was shorting this, and good sign that I took my profits when I did, because now it's been reversing up. What did I see in terms of ICT trading? I saw the break of this. What I'm going to do is going to delete all the lines. And I just want to run you through my day. That's the best way to follow my trading, is to show you exactly how I enter, how I exit, how I manage my trade. So even here, we haven't got a set of play. So what happened? What you can see, I don't know if you can identify it, but we have some sell side liquidity forming nicely with fair value gaps. If you can't see them, I would recommend you going back to doing the course. There's some really nice opportunities in this graph here, and I'll show you right now. The first fair value gap. First of all, what we do have to have is a break of structure, and we had the break of structure here on the top of the swing high. We had this break of structure all the way to the top here, and someone could have used that for an entry all the way to the top. Okay, so that was for a long position. Then we got into this consolidation. I'm looking for a short, remember, my bias is short. And if you put a line on the bottom side of these candles, is nice support line created there, which potentially for the retail traders, this will be a nice opportunity that they would put their stops under if they've been long from this area. So I'm expecting this price to come down and take that liquidity out. What is the target for lower? As you can see on the left side here, we have some nice fair value gaps. This is on the 1 minute. One there. If we change that to a fair value gap, and then another one there, and another one which has been filled there. So there are the fair value gaps. Let's label them correctly. And what we'll want to see is, what we're expecting is that the price will come down, break the structure, find liquidity, and hopefully it will give us a structure that we can go short. And the next targets can be the low sides of this. So the next swing low. If anything you've seen a difficulty for it reaching, you can attack the previous the areas that it will fill from the fair value gap. So there's another one there on exactly on the midnight open. So let's see what happened. The price came down. So we are looking that the price is going to come down here, and it did. But did I take this trade? No, and the reason is because I didn't find an entry. At this area, the price went all the way down and went straight away to that fair value gap there. It didn't provide an entry, and this is the tricky part, that a lot of people will see that break, go in, and then it goes against them the other way. That's why you need to be patient. And what happened next, if we look on the area, and also let's identify the fair value gaps on the here. So these, if we make this like a red, this is area of interest where I want to go in. If anything, we want the price to come up to that level there. And if we play it through, price cracks down, comes up, and now I am in. So this is what I had positions in here and in here, going short, and we'll play through. Let's move that out of the way. Have to sit in a bit of heat, and off it came down to target. Let's pause that there. So what happened here, I was on the 15-minute to set up my stops. I got entered there, and as you can see, we had a nice equal level resistance there that the price took out. So I had to sit in this, which was from that position there. I had to sit for 10 pips of heat, and then let it go to run to fair value gap, and I stopped the trade. Now if I had waited, let's see what would have happened. I would have made quite a nice profit there. I made like 20 pips, but considering I had been in a trade in the morning, I didn't want to push my luck, so I took my trades, and that was it. That was the USD, and if you look on, it then screamed up. So it went all the way down, filled fair value gaps, and then went up to the price open. The second trade was the DAX. This was in the afternoon session, and what I was looking for, my bias was long, and the reason was, if I go on to the daily, we had some buy side liquidity on, let's go to the hour actually. The main reason I was long on the DAX was these two prices here. Look how perfect they're perfect when it hit that price. Now, someone who's looking at resistance and support will think that that is strong resistance, exactly on the 14,000. So that was my area that I think the price could go. Now, if we look on the daily, because normally you take your daily of the price, it has been selling off. So there's a good opportunity for me to trade into that area there. If you are into the Fibonacci areas, that would have been trading into the 38 from the 23. So multiple confirmations there. And if the price was gonna go down, it has a lot to travel before it comes to the next swing low, which is down here. Okay, so we're talking about we're talking about a lot of pips. So 900 pips. So what we're gonna, I was quite comfortable for this to have a retracement candle after this move. So what we'll do is go into, like we normally do, into our 15-minute. And now I need to change because I was in the New York session. It's quite handy that TradingView can do that. And then it's easy for you to identify the midnight time. So we went on the midnight time, which was there. And that's the price there. We'll change that to midnight open. And as we see, the price went down. And the open of the price of 7, 8 o'clock. That's the Forex open of the market open there. So what did I see? I saw the price coming down on midnight, and then we had the trading time through the London session, and then the price started coming down, and I've identified this fair value gap here. Look how nicely that filled it in. Fair value gap. I was entered from the top here, so I had to wait for a bit. As soon as you got here, I got my second position, and then I let them run for just 10 to 20 pips. If I could have, hence size, I could have left that going a lot further. Let's see. That's it. So let's close this. So what did I see for that bias, as we discussed, was the 1 hour. And even though my idea for the long position was all the way to the top of that buy side liquidity, it gave me enough confidence that the market had more reasons to go onto the upsides rather than the downside, because there's more easy opportunities to take liquidity out of the market. And that area there would have been, if you're swing trading this, that would have been a nice entry. Also, another entry would be down here. So these would be two areas of fair value gaps that you could use to trade. So what we are looking for was for that fair value gap to be filled and to take some profit there. And if you look, that doesn't look like a big move, but it's on the hour. So when we drop that down to the minute, so we saw the market pushing into that fair value, and then we consolidated. We had a break of structure here, pushed all the way down, and then all the way, we found a fair value gap, which was this area here for the first trade. So we had to sit in a bit of heat, and all the way down to this position, and I was going to enter the second position close to this area because I was convinced that this will come back to retest the midnight open of the New York session, and it did right that, and I took profits from the bottom position, 10 pips, and closed when the top position came up into a 10 pips profit. Like I normally say, I am still working, because this is a new method that I've been using. I am still working towards letting the profits run, and also I am managing my trades in and out with Scruffy Madness. And Scruffy Madness is you take partials as the price is going for you or against you, and it makes that less stressful. So there you go. There you have it. 2 trades today. We had an indice trade, and this is on the 5%ers on my 125,000 funded account. Another successful day. I hope you have a good Christmas week. And if you found this useful, make sure you like, subscribe. Today, if you haven't seen it, we did a live with on the channel of Traderlicious, trading the London Open. So go and check that out, and I'll see you tomorrow for another trade.
Run it.